How's it going, fellow traders? It's Magic Trader here, and this is the CFTC report for August 7th, 2018. Here's a snapshot of the positions being held by the institutions for the majors, as well as the US dollar. And so let's take a look at gold. So we can see that the institutions are heavily short. I mean, we've seen that build throughout the weeks. In fact, I was anticipating a drop since these highs up here. And we can also see that slowly the longs were becoming just a tad aggressive out through this area here. So here's the deal. I posted an article on the website in the journal, and it was relating to gold, and every single time the institutions were heavily short biased and aggressive with their positioning, just like we are right now. And what I found was that every time they were this aggressive to the extremes like this, the coloration here, I saw a move to the upside take place on the charts. So far we haven't had that. And I've mentioned that this area of demand has just recently been taken out, leaving this new area of supply up here. So there could be a move like this to the upside. The only thing is that when you look at the US dollar and the euro, what we're seeing is a lot of strength coming in on the dollar and a lot of weakness coming in on the euro. So it could mean that, as price moves lower, we could just see even more shorts being accumulated, and then eventually get a bounce from down in this area. That's a major monthly bullish engulf right there, so I'm expecting some kind of a reaction from down there if we don't get it in these areas. Bottom line is I will be looking to take shorts if the right setup appears, but so far haven't seen anything decent. Longer term, we're expecting a move to the downside like that. Okay, let's take a look at oil. What's oil been up to? So oil's been getting weaker, and we've been expecting that ever since the profit taking up here, and still very aggressive with long positions and cooled off on the shorts, but we're seeing still more downside. Hasn't quite hit that weekly area of demand just yet, and I suspect some kind of a move to the upside will take place once that does happen. But still, longs are aggressively positioned. And so if a bigger move to the downside is going to take place, we'll have to see a lot more of those longs being closed off. Big move since January though, 866,000 down to 691, but still very, very aggressive with their longs. Let's go on to the next one. We see the US dollar. So we got a break to the upside. We did not end up getting any type of drop from this area of supply. In fact, institutions decide to take it out. And so as this candle was consolidating here, they increased their long positions. Overall, longs have been getting aggressive and closed out shorts. So again, I was mentioning before that when you close out shorts, it causes price to push up. So closing shorts, adding longs, both causes a pressure to the upside, and it was enough to take out the weekly area of demand. Now, I will be doing a webinar shortly to discuss why exactly this took place. I had done a previous webinar to say, we can't go long until this is taken out, and we can't go short until an area of demand was taken out on the daily chart. I said we got to wait for one of the two to happen, and then that will open up the floodgates. So in this case, the weekly area of supply was taken out, opening up the floodgates for a move to the upside. So like I said, I'll be doing a webinar soon to break down how this could have been anticipated, this break. Okay, I wasn't anticipating it, but now after reanalyzing the charts and taking a look at where my analysis went wrong, I now realize that I could have anticipated this zone to be taken out. And that will be coming up on an upcoming webinar. Okay, so Aussie US dollar, what do we see? Shorts are aggressive, increasing, and longs are still cooled off. And what do we see right before we We had this candle consolidation, increasing shorts, a big drop to the downside, penetrating deeper into this already tested weekly area or monthly area of demand. So we get some consolidation here, candle moving down. Looks like this could be easily taken out. Excuse me. And if we do take that out, we'll have a nice area of supply up here to eventually get in for shorts. The bottom line is 78% exposure to the short side. Coloration of the cells is red. We are expecting a move to the downside. Alright, let's take a look at the USCAD. What do we see here? So USCAD, now it makes sense. This hitting the weekly area of demand and that move to the upside on the dollar. So everything's aligned now. This could be the pad where the rocket launches off of, right here. So I'm waiting for the right type of setup because I do have to respect the fact that a monthly area of supply is being reacted to right now and the trend line hasn't broken yet. So waiting to make sure the right amount of force comes right off of this area, and once the right setup is there, I'll enter into a position long. Taking a look at the institutional positions, we can see that the sentiment is blue, meaning neutral. And again, see how that ties into me waiting for the right setup to go in long? Neutral. So, shorts increasing, and that comes as this candle here consolidates, and longs increase. Shorts increase to get price to drop into demand. Longs increase in preparation for a move to the upside. That's what's most likely in play right now, considering what is taking place with the US dollar. Alright, so let's take a look at the US Swiss franc. So just a lot of consolidation here. Hard to get into a position when there's no ideal setup, but an increase again in long exposure. Longs are aggressive and shorts are cooled off, so that does suggest a move to the upside like this. I'll be waiting for this weekly area of supply to be taken out, and then I'll be looking to get in long. Okay, Euro US dollar. So we saw this candle consolidating here, and an increase in longs, and a dramatic increase in shorts. Look at that, from 151,000 to 167,000. Pretty dramatic. But if you take a look at the overall exposure, long exposure dropped by 1%. Okay, not what it used to be. Bullish, becoming neutral, and I'm expecting a larger move to the downside like this. And but right now we're hitting and reacting to this weekly area of demand. Okay, but still very aggressive with their long positions, which is going to be it's going to be something for me to learn from here, because yes, they used to have 239,000 here. Okay, that wasn't too long ago, just over here, and back here 260, and that was back over here. But still very aggressive with their longs, and they're pushing price down. So this is going to be a learning experience for me, because I want to see just how long they're going to hold these long positions here. They were very, very overexposed to the long side. They tried to close as many as possible up here without disturbing price too much, but they didn't manage to do all of it. And you can see that's why I was with the bias of a move to the upside, so that they can close off a little bit more of those long positions before this bigger move. But shorts are becoming aggressive and increasingly every week, so I'm going to watch this play out and see what takes place. I am going to be opening up a trade soon. I got orders in the markets, and I've already posted the trade setup in the portfolio section of the website, so members can take a look at the setup there. As for the pound, let's take a look. Increase in shorts, but a massive increase in an increase in longs and a massive increase in shorts. And that came as price was dropping right through that weekly area of demand. Okay, so short exposure still sitting at 70%, but an increase in net positions from a negative 47,000 to a negative 58,000. Bottom line, aggressive with shorts, slowly turning from neutral to bearish. Shorting is the way to go on the pound, at least to down here. And then we'll examine the markets afterwards. Okay, let's take a look at the US dollar Japanese yen. Longs are aggressive, shorts are neutral, and bullish bias for the last 3 weeks. Net positions in the positive. Everything's looking good for a move up, but unlike the USDCAD hitting weekly demand, we have this trend line holding price down, so you got to be careful. So I'm waiting for the right type of setup to form, and then I'll be interested in getting in long this one, because I do believe we're going to see this one head up like this. Okay, let's look at the Kiwi. The longs are cooled off, shorts are aggressive, 73%. Sentiment is bearish, and that came as we are consolidating, and then boom, massive drop to the downside. As I've been saying, I've been expecting this to drop. Multiple tests of this weekly area demand finally broke, leaving some supply. A drop and a rally up here would be great for a short position. And that's pretty much it, folks. Hope you enjoyed it. That is your CFTC report, and I hope you use it to help you with your trading decisions for the week. All right, take care of yourself.